Japan is concerned about the fact that the yen has traded to 152, and they're actually speculating or ruminating about the fact that they may intervene to stop the yen from weakening beyond 152. But when I first started trading foreign exchange back in the 1970s, yen was trading 350 yen to the dollar. It traded 250 yen to the dollar. It traded 150 yen to the dollar. So the fact that we're at 152 yen to the dollar and the possibilities of some intervention are, I think, inconsequential. I think if the Bank of Japan were to intervene against the Japanese yen at 152, maybe it goes to 150. But I think we're trading. I think over the course of the next several years, we trade yen back to 200, maybe 225.
Right.
Gold has gone from the lower left to the upper right in dollar terms. It's gone from the lower left to the very upper right in yen terms. It's gone from the lower left to the very upper right in euro terms, and it's going to continue. So it's inflationary problems around the world, not just here in the United States. I've been bullish on gold in yen, euro, and dollar terms, and continue to be so.
I can't say enough, folks, about what you just heard there is classic Gartman, which is if you're not a student of history, you don't get to win. And sometimes you lose money. Gartman lost money in 2000. I think it was 21 he lost some money there as well. But the study of history, every chart on yen ends 3 years ago. Gartman has the courage to go back 30 years to look at the different trends and vectors. Paul, jump in on gold.
Dennis, who is buying gold these days?
Central banks have been the major buyers. The Bank of Japan, the Bank of China has been a very large buyer of gold. The Bank of Russia has been a very, very large buyer of gold. Central banks have been buyers of gold, and they are the sponsors of the gold rally thus far. I think gold continues to go higher because of the fear that the United States may trap Russian assets here in the United States to pay for Ukraine. That's been a discussion several times. And if that were to occur, gold would go up another $50 to $100 that day when that announcement comes out. So I think gold wants to go a lot higher. Central bankers have been the buyers. I'm a little concerned that we're actually seeing the public in rather aggressively. So for my own account, I actually sold a few out of the money calls against my gold miners on Monday and Tuesday. But I think gold wants to go demonstrably higher, and those calls expire tomorrow, and I'm slightly out of the money on them. So that's turned out to be a good idea.
So have the miners traded similar to the underlying bullion?
Miners have lagged well behind bullion for the course of the past 5 years, to be quite honest, and now they're beginning to pick up and catch up. I think that if you're going to be involved in gold, GLD is where I've been with the bank, with the endowment fund at the University of Akron. But I think for the public, if you're going to be a buyer of gold, be a buyer of the gold miners. I think they're starting to catch up to the movement that we've seen in bullion over the course of the past several years. They have become very cheap, and they want to go, I think, demonstrably higher.
Let's move on, Dennis, to the CPI report of yesterday. Is this a pandemic CPI? Or is it a CPI from yours and my youth?
I think this is a CPI from yours and my youth. I think we're starting to see inflationary pressures incumbent everywhere. Grain prices have stopped going down and have started to go up. Meat prices have been going up for a while. Clearly, crude oil and heating oil prices have been going from the lower left to the upper right, and I think are going to continue to do so. Copper prices, tin prices, aluminum prices have been going up. This is, I think, a problematic circumstance, not something that's going to go away anytime soon. And that's been one of the driving forces behind the purchase of gold and gold's bull move. So I'm a little concerned, again, that the public has gotten enamored of gold in the course of the past week or two. But the fact that we've taken gold down $15 or $20 from its high probably took a few of the weak hands that had come into the market in the past couple of days. I think if you want to be a buyer, you've probably got another $15 to $20 on the downside in gold, but then I'd be a buyer there, no question. And again, I think the real trade is to own gold in dollar terms, yen terms, and euro terms. This is something that's just beyond a dollar circumstance, beyond a U.S. circumstance. This is a global circumstance that's prevailing right now.